So Michael Saylor, the man who made Never Sell Your Bitcoin his entire personality, the guy who looked into a camera with the intensity of a man who found God in a Denny's parking lot and told you, told me, told everybody this.
And I promise not to sell the Bitcoin. And so we're in the business of not selling Bitcoin. We got very good at it. We have a PhD in HODLing, you know? And so I figure, why don't we just HODL for the thousands of companies instead of try to convince everybody else to do what we're doing and convince their shareholders and their board of directors?
Well, he just got on an earnings call last night and said, and I quote, "We will probably sell some Bitcoin to pay a dividend just to inoculate the market and send the message that we did it." Inoculate the market? That sounds like a pharmaceutical company, not a Bitcoin maxi. What's next, Michael? We're just gonna sell a little bit of Bitcoin to build herd immunity. The internet is melting. Polymarket odds of strategies selling Bitcoin before year end shot from 10% to 48% overnight. MicroStrategy dumped 4% after hours. Bitcoin Twitter is in full civil war mode. And look, I'll be honest with you. My first reaction was the same as yours. It felt like getting a text from your pastor that says, "Actually, I've been considering Buddhism." But here's the thing, and stay to the end because I'm going to explain to you why, even if Saylor has completely lost it, Bitcoin doesn't care. Not even a little bit. So let's get to it. Sunday. Okay, so yesterday, Strategy holds their Q1 2026 earnings call, and the numbers, oh buddy, the numbers. Net loss, 12.5 billion with a B, like B for boy, that's a lot of red. Operating loss, 14.5 billion, third consecutive earnings miss in a row. Now, before you jump off a building, this is almost entirely unrealized. It's paper losses. Under the new GAAP fair value accounting rules, they have to mark their Bitcoin to market price every quarter. Bitcoin went from 87K to 68K during Q1. That's a $14.46 billion paper hit that runs straight through the income statement, even though they didn't sell a single sat. It's kind of like if your house dropped in Zillow value by 200K. And your accountant made you report that as a loss on your taxes. You'd be like, dude, I'm still living in the house. But the numbers weren't the headline. The headline was what came out of Saylor's mouth.
You buy Bitcoin with credit, you let it appreciate, and then you sell Bitcoin to pay the dividend. And as long as you're issuing credit in excess of the break-even point, then this business works and grows forever.
A Bitcoin development company. Michael, you're not developing Bitcoin, you're buying Bitcoin. That's like calling yourself a gold development company because you have a big safe. Come on, man. Then CEO Fong Li comes in with the kill shot. We will sell Bitcoin when it's advantageous to the company. We're not gonna sit back and just say we will never sell the Bitcoin. Hold on.
And six, not necessarily most importantly, but maybe most notable, we will sell Bitcoin when it's advantageous to the company. Right? We're not going to sit back and just say, we'll never sell the Bitcoin. We want to be net aggregators of Bitcoin, increasing our total Bitcoin, but more importantly, increasing our Bitcoin per share, because we think that is what is going to be most accretive long-term for MSTR and for the common.
Cool, it's fine, it's cool. Everything's fine. So the guy who built the world's largest corporate Bitcoin stack, 818,334 BTC, approximately 4% of all Bitcoin that will ever exist, just gave Wall Street the green light to price in a sell. Great, love it. Huge fan. Oh, put down the bottle. Okay, before you panic, let me show you how this machine actually works, because that's where it gets interesting. Okay, so to understand why Saylor said what he said, you need to understand the Rube Goldberg machine he's built. Because most people, even smart people, don't get how strategy actually works. They think it's just a guy buying Bitcoin. It's not. It is financial engineering on an almost absurd scale. Here's the basic loop. Step 1, strategy sells stock or preferred shares to investors. Step 2, take the cash, buy Bitcoin. Step 3, Bitcoin goes up, stock goes up with it. Step 4, sell more stock at an even higher premium. Step 5, buy more Bitcoin, loop, repeat forever. It's like an infinite money glitch. As long as Bitcoin keeps going up and people keep buying the stock at a premium, which is a pretty big if, right? We'll get to that. Now here's where Saylor got really creative. He didn't just sell regular stock, he created a whole financial buffet of products to suck capital from every corner of Wall Street. He's got STRK, Strike, 8% dividend. STRF, Strife, 10% dividend, no conversion. STRD, Stride, 10% dividend, non-cumulative. STRC, Stretch, variable rate at 11.5% and adjust monthly. 8.5 billion of this stuff outstanding, and all of these pay dividends. In cash, not Bitcoin, not stock. Cash. Total annual dividend bill across all preferred classes, over $1 billion a year. You know what Strategy's actual software business generates? 60 to 70 million. That's like having $100,000 a year mortgage payment and a lemonade stand that makes $6,000. So how do they pay $1 billion in dividends with 70 million in revenue? By selling more stock, more preferred shares. It's a recursive loop. The machine feeds itself. And here's the number that explains everything. The magic number. It's called MNAV. The multiple net asset value. Basically, how much more is the market paying for Strategy stock compared to the Bitcoin it holds? Right now, MNAV is 1.28x. The market pays 28 cents premium for every dollar of Bitcoin inside Strategy. When MNAV is above 1.22x, selling new shares to buy Bitcoin is accretive. It's a good deal. You're selling expensive paper and buying cheap Bitcoin. The machine works. When MNAV drops below 1.22x, selling shares actually hurts shareholders. And at that point, selling Bitcoin to pay the bills is literally the smarter move. Allegedly. Fong Li said it himself. Below 1.22x MNAV is actually more accretive for us to sell Bitcoin and pay off our dividends. So Saylor's not having a crisis of faith. He's reading a spreadsheet, and the spreadsheet says, at this price, sell Bitcoin. At that price, sell stock. It's a treasury operation, not a betrayal, allegedly. But I get it. It feels like a betrayal. Let's talk about why. All right, let's be honest. I'm not going to sit here and tell you this is all sunshine and rainbows and ponies. There are legitimate concerns. Let's run them down. Bear point one. The brand is cooked. Never sell. It wasn't just a strategy, it was like a religion. It was what separated Saylor from every other suit on Wall Street. People bought MicroStrategy specifically because of the conviction, the diamond hands premium. At its peak, MicroStrategy traded at 4x the value of its Bitcoin. 4 times! People were paying $4 for $1 of Bitcoin just because Saylor said he'd never sell. Now MNAV is 1.28x, and he's out here talking about inoculating the market. Bear point number 2. The recursion has an exit door, and it's labeled panic. The machine works when everyone has confidence. Investors buy stock. Strategy buys Bitcoin. Bitcoin goes up. More investors buy stock. But what if confidence breaks? What if Bitcoin drops 50% and nobody wants to buy MicroStrategy or Stretch? The machine stops. But the dividend bills don't stop. $1 billion a year, every year, whether Bitcoin's at 100K or 30K. And then you're not selling Bitcoin because the spreadsheet told you to. You're selling it because you have to. At the worst possible price during a bear market with everyone watching. December 2022, they sold 704 BTC at $16,776, the absolute bottom. That's not a flex. That may be a bit of a cautionary tale. Bear point 3, the S&P said junk. The S&P Global gave Strategy a junk credit rating. They specifically warned that Strategy's convertible debt might mature during a Bitcoin stress event, forcing them to liquidate at depressed prices. This isn't me saying it. This isn't some random Bitcoin Twitter account. That's the S&P. Bear point number 4, the losses are getting hard to ignore. 12.5 billion net loss, third consecutive miss. Yes, it's unrealized. Yes, it's mark to market. But at some point, Wall Street stops caring about the explanation and starts caring about the number. And the number is 12 billion in red. So yeah, I hear you. The bear case is real. But Let me walk you off the ledge, my friend, because when you actually look at the details, this story is way less scary than the headline. Bull point number 1, he'd be selling a rounding error. Saylor called it inoculation. You know what inoculation is? A tiny controlled dose. 818,334 Bitcoin and growing. If he sells 0.5%, that's 4,000 Bitcoin, about 327 million. If he sells 1%, 8,000 Bitcoin, 654 million. The Bitcoin spot market trades billions every single day. ETF inflows regularly exceed that on busy days. A 4,000 Bitcoin sell is like, I don't even know, it's like it's draining a teaspoon out of Lake Michigan and running to Twitter screaming the lake is drying up. Bull point number 2, there are literally no margin calls. Okay, I need everyone to hear this very clearly because this is the thing most people are getting wrong. Strategy's $8.2 billion in debt is all unsecured convertible notes, maturities from 2027 to 2032. None of the Bitcoin is pledged as collateral. None. There is no price at which Strategy gets liquidated. There is no margin call. If Bitcoin dropped to literally $1, creditors still can't force a sale. Saylor said this himself. The man structured his debt like a paranoid genius. This is not Three Arrows Capital. This is not Celsius. This is not some degen with 100x leverage. The Bitcoin is sitting there, unencumbered, no strings attached. Bull point number 3, they got $2.2 billion in cash in the bank. That covers roughly 2.5 years of dividend obligations at current rates with zero revenue. They're not scrambling. They're not desperate. Saylor's not selling Bitcoin because the lights are about to go off. He's selling because the math says it's smart at a certain MNAV level. Bull point number 4, they're still massively net buyers. In Q1 alone, 89,599 BTC bought for $7.3 billion. In Q2 so far, another 56,235 BTC, that's 145,834 Bitcoin purchased in 2026. Bull point number 5, the tax hack. Here's another thing nobody's talking about. Strategy has $2.2 billion in unrealized tax benefits on their balance sheet. By selling specific high-cost basis Bitcoin coins they bought at 80K, 87K, they harvest capital losses for tax benefits. It's not a loss, it's a deduction. Their accountant is probably high-fiving them. Maybe Saylor and Fong Li aren't breaking a promise, they're doing calculus. Okay, so here's where we get to the real talk, the part I've been wanting to say this entire episode. But before we bring it home today, look at our likes!
3 or 4 times, maybe.
I'm gonna pump those numbers up. Those are rookie numbers in this racket.
You can secure your generational wealth the right way. You're gonna want to see our friends over at the Bitcoin Way. Not your keys, not your Bitcoin. If your Bitcoin is on an exchange, it's in MSTR, STRC, it's in IBIT, whatever. That's not your Bitcoin. That's Coinbase's or Larry Fink's. The Bitcoin can be seized, frozen, restricted, you name it, all at the drop of a hat. Bitcoin held in self-custody cannot be frozen, seized, or restricted. The Bitcoin Way sets you up with ironclad self-custody, proper hardware, your own node, full on-chain verification so your Bitcoin is actually yours. Their team guides you through the entire setup step by step, and they can help with privacy phones, Plan B residency, and so much more. No single point of failure is standing between you and your generational wealth. Book your free 30-minute consultation right now, scanning that QR code or clicking the link in the show notes, and begin your journey towards sovereignty today. The Bitcoin Way. Bitcoin-backed loans. You keep your stack, you get cash, and you repay whenever you want. Zero penalties, zero monthly payments, and right now, Ledn just dropped their lowest rates ever. No fine print, no complexity. The larger the loan, the lower the rate, and you see every number up front before you even apply. Here's why I trust them personally. Your Bitcoin is custodied at all times, never lent out for interest. You get auto top-up protection, LTV alerts, and partial repayment options, so you stay in control through any market condition. That's not marketing. That's literally $10 billion in loans across 8 years with a perfect track record. Every market cycle, not one client's funds have been lost. Don't choose between a great rate and the safety of your Bitcoin. Ledn gives you both. Scan the QR or use the link below and head over to ledn.io today. Okay, here we go. Let's say the absolute worst case plays out. Let's go full doom. Bitcoin crashes. Strategy can't raise capital. MNAV collapses. Saylor has to dump tens of thousands of Bitcoin onto the market just to keep the lights on. Full panic mode. The poly market bet hits. The bears were right. You know what happens to Bitcoin? Absolutely nothing. A new block every 10 minutes. Same as yesterday, same as it was when Mt. Gox lost 850,000 Bitcoins. Same as it was when China banned mining 17 times. Same as it was when FTX imploded and everyone said crypto was dead. Same as it was when your favorite influencer got liquidated. Same as always. 21 million, proof of work, no CEO, no earnings calls, no preferred stock, no dividends, no board of directors that can vote to change the rules. Saifedean Ammous, the man who literally wrote the Bitcoin standard, the man who orange-pilled Saylor himself, said it best. If Michael Saylor ends up with 10 million Bitcoin, what is he going to do? He can't hard fork it. He can't print more. If he acts against shareholders, they sell and buy Bitcoin somewhere else. The market mechanism protects itself. That's the whole game. Game theory. That's the whole point. Bitcoin was designed for exactly this scenario. An entity gets too big, gets too greedy, gets too stupid. The protocol doesn't flinch. The difficulty adjusts. The blocks keep coming and the Bitcoin flows to whoever values it most. So let me say this as clearly as I possibly can. If Michael Saylor wants to sell Bitcoin, that's his problem, not Bitcoin's problem, not your problem if you're holding your own keys. If Strategy, the largest Bitcoin treasury company on earth, decides to liquidate its entire stack tomorrow, you know what thousands of people are going to be doing? They're going to be buying the dip with a smile on their face. Because every Bitcoin they sell gets picked up by someone who actually understands what they're holding. Someone who doesn't need a CFO to tell them when to buy and when to sell. Someone who's been stacking through every crash, every FUD cycle, every Bitcoin is dead headline for years. More Bitcoin for us. BlackRock wants to dump. More for us. Government wants to sell. More for us. Saylor wants to inoculate the market. Cool. More for us. They can all choose to lose. That's their right. Oh, and if you're serious about Bitcoin mining, there's one event you need to be at this summer. Mining Disrupt 2026, Miami, July 21st through the 23rd. This is the conference for miners, hardware makers, energy companies, and anyone building real Bitcoin infrastructure. Keynotes, panels, massive expo floor. The deals that shape this industry happen here. Use promo code SimplyBitcoin for 20% off your tickets at miningdisrupt.com, and we'll see you in Miami. Bitcoin is not a company that goes bankrupt. It's not a stock that gets delisted. It's not a CEO's reputation. It's not an earnings call. It's not an MNAV multiple. Bitcoin is money. Sound money. The hardest, most uncompromising, most incorruptible money ever created in the history of civilization. And it doesn't give a single sat what Michael Saylor does with his quarterly dividend obligations. Stay humble, stack sats, subscribe, give us a pamp, let us know what you think down below, and I'll catch you all next time. Love you guys. Push.
If you prefer to go down with the ship, you.